of Canadian Mortgage Weekly. It is Thursday. It is episode 42 this week. And my name is Sam Thompson, and today I'm joined with.
Joe Bladdick, how are you, Sam? It's good to be here with you today. It's great to be part of this episode.
Yeah, I'm so excited for today's episode. We have a really great topic, and it is actually episode 41, not episode 42. But yeah, so happy to have you with us today. How are things been with you?
Oh, pretty good there, Sam. Thanks so much. And yeah, we have so many episodes, right? It seems
Mhm.
like we are losing track these days with our Canadian Mortgage Weekly.
That's right.
But there's a lot of stuff going on in the mortgage market. It's always good to connect with you, Sam, on these episodes. So yeah, why don't we get started?
Yeah, it sounds good. There's been a lot of news to cover this week, and one of the things that you had actually found and we were chatting a bit about was regarding Evergrande.
Yeah. Yeah, definitely. I'm not sure how you say it either. I've seen it said a few different ways,
Mm,
Evergrande, Evergrande. But yeah, they are all of a sudden we're hearing about some financial trouble coming out of there, and they're based out of China.
mm,
And they are a big commercial property developer. They have projects in over 200 and about 234 cities in China.
wow.
Yeah.
Wow.
So what I'm hearing now is that they are defaulting on their bond payments, which is a pretty serious thing, and a lot of investors are taking note of that.
Yeah, it'll be interesting to see. I feel like a lot of people are maybe wondering, is this isolated to China? Could we see this rippling over and affecting, investors in North America as well?
Yeah, it's a really good point, Sam. That's something we'll keep an eye on here at Canadian Mortgage Weekly. We really need to know, is this going to affect the Canadian market? Is there any Canadian firms involved in this?
Hmm.
Usually, when we see something like this happen, it can have a ripple effect across the country, nationally for sure. But globally, we'll have to see. I mean,
Hmm.
it will all depend if China is interested in bailing out the developer, perhaps, and going that way. But we'll have to see, and we'll keep you guys all posted on that. But I know that in Canada, the real estate market is strong. We're still seeing record
Yeah.
numbers.
Hmm. Yeah, it's
Yeah.
definitely been busy, especially busy in Canada this week as it is election week.
Yes.
The polls were open on Monday for the official vote,
Oh, yeah.
outside of the advanced polls.
Yeah, absolutely. And it's been really awesome to see our country go through an election. Also, a little bit, uh, it was a very quick election at the same time,
Mm-hmm.
but gave everybody a chance to get out there and have their say.
Mm-hmm. Yeah, definitely a busy time for a lot of Canadians for sure.
Yeah, we'll have to keep an eye on all the housing policy that comes out now going forward, and we'll make sure we keep you all updated here as well on
Mm-hmm.
Canadian Mortgage Weekly.
Yeah, absolutely. Yeah, and regarding the housing policy and just where housing is at, we have seen some
Yeah.
awesome rates. I know coming into the week,
Oh, yes.
there was some awesome, special rates that were listed and a bit of a drop that we saw.
We did. Yeah, Sam, you're absolutely right. We saw a drop in the rates. The rates coming into the week, they came with the big banks lowering their 5-year rates across the board, and just it seems to have ignited a little bit of housing market start here a little bit. We're seeing
Mm,
some people notice the new rates, and I'm noticing them a lot. We're wanting to make sure our clients get the lowest rate they can. So
mm-hmm.
as lenders drop rates, we want to make sure we get those out to our clients. So yeah, it's really awesome to see, especially in this market where it's uncertain and a lot of people have not known where the rates are going, and there has been a lot of talk of the rates going up, especially next year. But now to see the rates actually come down, especially on a fixed rate, it's really encouraging.
Mm-hmm.
Yeah. So with that, I'm sure that we'll see a lot of people looking at getting new mortgages and getting probably refinances done. And if you're looking at getting that done, we can take a look at the numbers for you.
Mm-hmm.
Um, with refinancing a mortgage. But sometimes with refinancing your mortgage, it's just not possible, or not financially, may not make sense, or
Mhm.
maybe we can't do it. And then there's such things as second mortgages.
Mhm.
And with that, goes into our presentation today, which is 5 things to consider about second mortgages.
Yeah, we've got a really good topic. Again, I feel like there's not a lot of information, or it's not, spoken about too much in terms of, what a second mortgage is, and how to get that. So we have a condensed list of 5 things to consider so that you maybe have an idea of, what a second mortgage is, how to get into it. So yeah, why don't we go ahead and start the presentation, and we can just cover off some really awesome information for everybody.
Yeah, I know that when um, I first bought my first home, I didn't know what second mortgages were all about. And just learning about them ahead of time, from ever needing one, will be
Mm.
beneficial for all of you viewers. Just knowing when is appropriate time to explore one.
Yeah, absolutely, for sure.
Um, yeah, but yeah, so
Awesome.
5 things to consider about second mortgages.
Yeah, that's right. We've condensed it down. We've chatted a bit about it before the video today for episode 41. But I guess again, just to blanket, give everybody the same information so that you know what it is before we start jumping into how to get one. So just covering off what a second mortgage is. So it's an additional loan taken out on a property that already has a mortgage. So again, you had intro the segment of, maybe you can't get a refinance. It doesn't quite work for you. That's, typically the more traditional method for those additional funds. But if that's not the case, then you can get, again, a second mortgage, which is a loan taken on the property that has an existing first mortgage.
Yeah, it typically is in the second position
Mm,
after your first mortgage, because when a lender does register the mortgage on the property, typically on title will be registered who's on first position and who's on second position.
mm,
And because the lender is registered in second position, the rates tend to be higher because of that extra risk that's involved, in that the first mortgagee would need to be paid out first if the property is ever sold.
mhm.
That's something that, with the rates involved, it's hard to determine exactly what they will be, but we'll cover
Right.
off that in later in the presentation here.
And it's important to note that a second mortgage is not added to your first mortgage. There will be additional payment on top of the payments that you're already making. So it's an important note to cover, if anyone's confused that, getting a second mortgage, they just get lumped together, or
Yeah,
it's the same payment. It does add a second payment on top of your existing mortgage.
yeah.
So looking into how it works, so many homeowners aren't aware they can get a second mortgage. Again, even you were saying that, as you were a homeowner for the first round, there wasn't a lot of information out there about second mortgages.
No, there really isn't. And we're really hoping that this video can give you a good introduction to what they are all about, and just to get an idea of how they work, and how they exactly can benefit you or solve a problem. Second mortgages, typically the way they work is that they're taken out against the equity in your assets. So that's typically on the equity in your home, and the equity of your home is typically determined by the market value of
Mm,
your home, excluding any current um, registered liens or mortgages on your property.
mhm, mhm. Yeah, and again, as we mentioned, it does involve additional payments that are added every month to your existing mortgage, and it's placed on your home in the legal term of a lien when it is your second mortgage.
Mhm. And it also can be set up as a home equity line of credit. That is typically useful if you don't need the money or the funds right away. You're able to
Right.
draw them down at a later point in time. But getting a home equity line of credit or a HELOC would be would require a strong credit profile, a strong credit score, and it is also only available sometimes at the discretion of the first mortgage lender on your property. So a lot of the times, uh, we'll need to make sure that your existing lender is okay and offering that sort of product to be able to get a home equity line of credit set up on your equity.
Mm-hmm. Okay, yeah. So for everyone that's wondering, a second mortgage, so it's a faster process to get the funds that you need. And there can be a number of different things that we see people using a second mortgage for. Probably the most typical, or one of the most typical, is debt consolidation, where they use it to pay off higher interest credit. Again, similar to a refinance. That seems to be a big one if there's anything maybe that's in arrears, or again, high interest credit. They can get that loan directly in the form of a second mortgage to pay that off, and maybe be able to pay it off with a softer interest rate compared to some high credit, whether it's a card or something like that.
Absolutely.
So again, it can be used for debt consolidation. So again, a second mortgage most typically is used for that case. If there is a credit account that maybe has high interest payments, they're able to take out that second mortgage and just transfer that debt into maybe a softer interest rate for the repayment process.
Yes, that's a great use of those funds. And they also can assist homeowners that have poor credit.
Hmm.
If you do have a lower credit score, second mortgages are a good solution still because they can be obtained with that lower credit score, typically because that mortgage is secured by your home. And with that, that can help you get the funds you need if you don't qualify for an unsecured loan elsewhere. You
Hmm.
can make sure that you get those funds that you need by putting a second mortgage on your home.
Yeah, and that can be very important again, especially in COVID, where what, a lot of people that we've been seeing in the office don't necessarily have a lot of missed payments, but they maybe do have some bruised credit. If I know that last year took a toll on a lot of homeowners, so it's good to know that there's an option available to get financing. If you can secure it with your property.
Yeah, you bet. It can really help out if you are in a position where you're facing mortgage arrears.
Mm.
Uh, don't feel like it's something to be ashamed about. Give us a call and we can walk you through the process when you're in this situation and how the second mortgage can solve that and get you back on your feet.
Mhm. Yeah, we want to cover off some typical payout examples. We did a very generalization of where we see these funds go.
Yeah.
But let's just have a quick look at some more of the specific examples that we see them second mortgages helping to pay for. And again, we had mentioned first mortgage arrears, or any property tax arrears. So if you do find yourself behind on those payments, and again, 2020 was a difficult year for a lot of people. So that can be a great way to use your second mortgage to pay those arrears out.
Yes, it can. And if you're facing other items such as judgments or liens, perhaps other emergency situations, unexpected medical bills,
Mm.
um, a second mortgage can really come in handy in those situations because you may not be in a position where, in the time when you need medical bills paid, that you have an income coming in, or maybe there's
Mm.
an emergency situation, you don't have time to work through the typical channels, and you need the
Mhm.
funds, very quickly. There are those situations where a second mortgage can come in handy. Um, Never really a long-term solution, but it is a solution that can get you through those times.
Mm-hmm. Mm-hmm. Yeah, again, and the speed is really key that you get those funds available, but it's also important to know the costs that are going to be involved in getting a second mortgage. So to cover off, what goes into the fees, there are lawyer fees that are required, as there are two lawyers that are involved in your second mortgage. So that is something to be aware of. As you're looking in the process, again, it's a good resource to use, but again, it does require those fees on top of the mortgage.
Yes, typically the fees that you would run into with a second mortgage are, there's two sets of lawyer fees as well as a lender fee and a brokerage fee. Sometimes we can get those fees reduced to as
Mhm.
minimal possible. There are lenders in this space that if you have really good credit profiles that these fees don't apply. However, we just want to make sure that you are aware of all the typical fees that we
Mhm.
can see on a file like this. But the good thing is that typically we are able to roll these fees into the mortgage,
Right.
similar to, say, how CMHC is rolled into a mortgage.
Mm.
So it's spread over a monthly payment rather than a one-time upfront fee.
Mm-hmm.
Yeah. And we can see an example here, actually, um, of some of the interest rates that are available on second mortgages, keeping in mind that this is an interest-only payment for a $25,000 mortgage. On a interest rate of 4.99%,
Mm.
that monthly payment will be just under $104 a month. Whereas if you're on the other end of the spectrum, and Sam, we do see that once in a while, right? Where some
Yeah.
credit profiles do come in, um, you know, they really need some help, but we can get that loan still for them.
Mm-hmm.
Um, and at the highest, you're looking at around just over $312 and 29 cents a month there. So quite a range, but so a lot of the times what we like to do is work with you and get you to a point where we are able to renegotiate that after the 1 year period or 2 year period,
Exactly.
and get you rolled into a much better situation.
Absolutely, yeah. Again, when you even look at the rate of 4.99, it sounds very high compared to, what today's rates are, especially we just experienced a bit of a rate drop. But again, 103 per month for in interest only, but for a loan of 25,000. Again, it can really help out if you find yourself in a tight situation where there's, unforeseen circumstances, emergencies, medical bills, anything like that. It's definitely a very advisable route to soften that payment load um, in this loan.
Yeah, absolutely. There, it's a good way to illustrate it there through those examples.
Hmm.
So let's take a look at now what you would need to qualify for a second mortgage. With the first being that the lenders will look at your property itself and they'll need to make sure that they feel secure with their investment by providing you with the funds in a second mortgage. They're thinking always the worst case scenario. What will happen if in fact we default on this loan?
Mm.
And in that scenario, they'll look at the property and make sure that it is a property that can be sold within a reasonable amount of time.
Hmm.
And, making sure your property is as best as it can be when you're
That's right.
applying for a second mortgage always can help as well.
Absolutely, yeah. And the second thing that they will look at is the equity that you currently have, excuse me, on your home. So the better chances you have of qualifying with the more equity that you do have in your home. So that is something that, again, as you're paying down your monthly mortgage, you're also building your equity in the home as well as appreciation. We've seen a lot of people come out on the positive end of equity with the house price appreciations that we've seen. So this shouldn't be a major issue, but it is a factor that the lenders will consider.
Yeah. And another factor that they will consider is your income. Whether or not you have an income to pay for this second mortgage will help you get that best rate and with the lowest fees. Sometimes you may not have an income, and that's okay. We still have lenders in this case, but we need to be able to assess where you're at in this situation to
Right.
provide you with some offers for the financing. So the more we have to verify any income payments that are coming in, even if it's from a family member sharing your living space.
Mhm.
Anything that we can document will help you qualify for your second mortgage.
Absolutely. And the last thing that they'll look at, we had looked at the examples on the previous slide of what the payment differences can be, is your credit score. So again, the healthier your credit is, the better your credit score is, the lower potential rate that we can secure for you. So we had seen a range on the last slide of about 4.99% all the way to 14.99%. So that is going to be the last, sort of impacting factor of, what those payments will look like for you in your specific case.
It's a good point there. Yeah, very good point, Sam. Credit score is a big thing there. So if you are looking at any of these situations that we have discussed today, you find yourself in any of these situations and you're interested in what we've been talking about, and you would like to get some more information as to where you stand, how much you can qualify for a second mortgage, what your payments would be expected at, give us a call and we can walk you through that, and also guide you with any documents you need,
Mhm.
um, and just get you all set up with some second mortgage financing. And perhaps you don't even need a second mortgage. Perhaps we can refinance you the way you are and save you from getting a second mortgage altogether. The point is, we want to make sure that we can guide you through the process, just like Sam did today through this presentation. Sam, we just want to get back at you. You're a mortgage agent that lives here in Barrie, Simcoe County. Yeah, you've been doing this for over, let's see, 19 months now, and
Yeah.
you've been at this, and you're licensed and you moved here from Ottawa. So welcome to the show. It's always good having you on here. Always love the presentations you're putting together here.
Yeah, thanks for having me. It was fun to be on today's episode, with you, Joe, chatting about second mortgages. And for anybody who doesn't know, Joe Bladdock is a mortgage professional, a broker, in fact, in the Barrie Simcoe area, who lives up in Aurelia with his family. Joe's been in the industry for over 10 years. So you're definitely a very knowledgeable, source for anybody with mortgage needs. So again, as we were saying, if you're needing extra funds and trying to figure out ways, if you can qualify, what it would look like, definitely reach out to our office, because between Joe, myself, and Terry Lynn, we definitely have a broad knowledge base, and we would love to work with you and run some numbers for you, on a more individual basis.
Sounds great, Sam. Thanks very much. And yeah, we look forward to seeing you next week on episode 42. We will see you there Thursday at 11:30. Keep an eye out on our Facebook page to see what we'll be talking about. Um, and if you do have any requests or questions or any other comments, feel free to leave a comment below,
Mhm.
or like or share this episode, and keep following us for future episodes in the future.
Mhm.